All right. Good afternoon, everyone. Today is Wednesday, Wednesday, March 6th, 2013. Let's see. We have, well, let me go over the results of the live trading room. It took us 3 minutes to get our 2 points this morning, 3 minutes in one trade. The net, or the gross, I should say, of the live trading room this morning was we made 10 ticks on the crude oil, 12 ticks on gold, and 2 ticks on soybeans. We had 6 trades altogether this morning for a gross, that means excluding commissions. We were $245 a contract this morning in the live trading room. There was a lot more available than that. I know we have partners that did multiples of what I did this morning in the live trading room. And that's the way it actually should be, because I'm focused on, first I'm focused on making the 2 points, adding some profit, and then I'm also focused on answering everyone's questions in the live trading room. And, trading as many markets as I can, putting on as many trades as I can, but making sure everybody's questions are answered.
Before I mute my mic, let me just say one thing. So you in the first 3 minutes you had 2 points.
Yes.
And that's $100 per contract.
Yes.
Okay. And then after 6 trades in the whole 2 hours, and because we're committed to continue trading for the full 2 hours because we have partners in there and people on a free trial, and we're committed to teaching and training for the full 2 hours. So the gross was, I believe you said 240?
245.
After commissions, that probably knocked it down. Well, let's use $8 as a round turn figure. So let's knock $50 off of that. What are we left with as a net?
200. Well, 195.
195.
Yep.
Okay. So one trade. Now, how many trades? It took one trade to get that 2 points initially, right?
Correct.
Okay.
Yes.
So one trade, $100 per contract.
Yes.
5 trades later, $200 per contract. Now, both positive, both good. I just want to point out to you, because I know that a lot of you who come to the live trading room and you see us trade multiple markets and you see us continue to trade after we've already got 2 points for the day, we run the risk of instilling in you some idea that that's what you should do. That you should try to trade 7 different markets, markets you don't know anything about, markets that are really fast, markets that have high margins, and that you should just trade as, if something moves, trade it. Okay? That's not our point. Our point is to teach you a simple trading method that allows you to get a couple points a day. Okay? But we really do encourage you to just turn it off after that. Go to sim. Go to the movies. Go to the park.
Go back
we
to bed.
keep trading because we have to. We're committed to trading for the full 2 hours. So pick a market or a couple markets and don't try to do what Michael does. And don't try this at home. That's what I wanted to say. All right. Back to you.
All right. Thanks.
Back to you, Bob.
Yeah, I mean, we have to, and that came up in this morning's live trading room. If we were just trying to make the 2 points, then we would have been done in 3 minutes. One trade, we would have been done. As a matter of fact, a lot of guys, if they were just trying to make the 2 points, would have been done in a couple of minutes and with one trade. I know, the question was, so how, when do we stop trading? And that's not up to me. That's up to you. We can give you recommendations. We can say, you know what, if you're confident trading and if you're making money every day, if you're consistently making money trading, if you have a time limit, we'll say, or even a trade number. Like, let's say you don't want to place more than 8 trades a day, regardless of where you stand after 8 trades. That's something that you can do. If you say, I'm going to trade for 2 hours every day, like I do, I'm going to trade for 2 hours every day, then, in the live trading room, that's what I do. I trade for 2 hours in the live trading room, and then, I'm done with the results in the live trading room anyway. But if you wanted to just go, set a point goal for yourself, if you wanted to get 2 points per day, then there you have it. Get your 2 points and just turn the computer off and go away. Go do something else. There's no reason for you to sit in there. If you're consistently making the 2 points, okay? If you're consistently making the 2 points, and you know your plan, you execute your plan, correctly all the time, then there's no reason to sit in there. All right. Now, that said, there's a couple things to go over. One is on the month so far, we are plus $1,325 in the 4 days traded. That's on 29 trades. 29 trades it took us to get to plus $1,325. Now let's just do the math and we'll say 29 times 8 is $232. We'll apply that to the total 1,325. I did that wrong. Hang on. 29, and we're using 8 is a high number for the commissions, the round term commissions. 8 is a high number, but we're just using that to make sure that everybody's pretty much covered in here. Okay. Why did I do that again? Anyway, 29 times 8, 232, and 1325, 1,093. So after 4 days trading this month in the live trading room, we're up $1,093 after commissions, and that's using $8 round turn as a commission. And we don't pay $8 a commission, but that's what it is. We're just using that number. Could you have done better? Yes, easily. Could you have gotten your 2 points and been done? Why, yes, you could have done that as well. If you had just taken 2 points as soon as it was available in the live trading room, you would have been $410 and 8 trades so far this month. Okay, that's where you would have been. That's it would have taken you an average of, it looks like an average of about, I don't know, 10 minutes per day so far this month. But that's the goal isn't to do it as quickly as possible. The goal is to just do it and keep track of how long it took us. All right, it's not to get in there and take extraordinary risk to take it, to get the 2 points as quickly as possible. As a matter of fact, the risk we take is the same on every single trade. Okay? It includes all the trades. It includes all the trades. Every single trade. Break even, flat, loss, everything. Okay? That's all the commissions. And let's see. All right, I just wanted to make sure I answered the questions that were in there. Now, I wanted to go over this little graphic. Starting in October, and that's not including October's gain. If you had a $10,000 account in October, just taking the trades from the live trading room, the first month, November, this was our gain. Add on the December's gain, this is where you would be. Add on January's gains, this is where you would be. February's gains, this is where you would be. And this is as of yesterday. So if you add another, what did we make? $245. Add another $245 on there. It'd be about 26,700 roughly. Is where you would be so far for the month of March. That's what it looks like in the live trading room. It's excluding commissions. So if you want to take, I don't know, let's take $1,000. We'll just call it $1,000 even off of it. I mean, you could take it off of the top, but there were times where we traded more and times where we traded less. So just, if you say you take $1,000 off the top of it in here, for last month. Well, last month we said 900. That was excessive. In here, let's say 5 months. Let's say $5,000 altogether, and that is excessive in commissions. Still not too bad. All right, that is what it looks like. I made that little thing last night. I'll try to keep it updated, but I might update it weekly, not daily. And we'll see. All right. Now, back to the actual trades today. We were plus 10 on crude oil, plus 12 on gold, and plus 2 on soybeans. We took 2 trades on beans, 3 trades on gold, and 2 trades on crude oil, I believe. May have only taken 1 trade on crude oil, but I think we took 6 trades overall. All right, let's start out with the crude. Okay, this is where we made our 2 points initially. All right, it was way back here, right here. On the open, we had the down close below the trend line right here, and we shorted it and took our 2 points right there. You can see there were more opportunities in here, but I was answering questions and stuff when all that was happening. So I missed all these opportunities. Now the trade setup, let me go through it for you. The one that I used in this particular instance is this one right here. Okay, this is a crude chart from a while ago. You can see it's not even the same symbol anymore. It's GCLH, and this is GCLJ. So we've now changed contracts, but it's the same thing. It's always the same, regardless of the market, regardless of the symbol. It's always the same. In this case, we had so much momentum that it didn't pull back and hit the BBC, so we didn't have a trade off the BBC right there. We ended up having a trade on the close down below the trend line. All right, that's what you look for, the close down below the trend line. All right, and down it went. In this particular case, it was moving down, and I was moving my stop to break even, and then I just decided to put a target in at 2 points, and it went down and took me out at 2 points, and it actually went through my 2 point target. So I got the 2 points off right away, and then we just went through trades as they were setting up after that. Okay. We did have a couple more trades. Well, that's crude oil. Sorry, I should probably show you the whole thing on crude. All right. After that, we had a little bit of a pullback here with a close down below the trend line with the bearish divergence. Okay. So you were looking for a trade there. Again, the same thing here. It tried to pull back and hit the BBC, but it didn't. Even over here, but this was a continuation of this trade. Over here, it tried to pull back to the BBC to hit the, but it didn't because there was too much momentum. So I didn't draw a trend line on it. I just circled it. The down close below the trend line was right there with the bearish divergence. That's where you would have gone short. On this one, we lost our momentum here. Not our momentum. We lost our divergence over here. Okay, on the down close right here, there was no room for this to run. And I believe I said at that point that this was not likely to make it through the swing low because there was no room for it to run right here. And it went flat for a while. Okay. Now today we had crude inventories come out. BBC is bull bear cross. It's the green line. Okay, the green line right here is the BBC. The red and blue line is the MA1. This black line is the black line. When I refer to the cycle, it's the thick red and blue line down here in the slingshot. And when I refer to the green line, it's the green line down here in the slingshot. Okay. All right, so we had a bullish cross. Price came down, tested the BBC, and this is a good example of, well, it's not actually a good example of it because we had red on the cycle. But again, the same picture comes into play here. You need, when the cycle is the wrong color, you see the trend line comes into play on two occasions. Number one is if price is below the BBC, not hitting the BBC and continuing below the trend line. Okay. And number two is if it hits the BBC but the cycle is the wrong color. That's when the trend lines come into play. Or even if it doesn't hit the BBC and the cycle is the wrong color. All right. If the cycle is the wrong color or it doesn't hit the BBC or both, those are the times where the trend lines come into play. All right. You can see we had drawn a trend line right over here down the tops. We tested the BBC. We had an up close, but we had red on the cycle, so there was no trade there. We would have needed an up close above the trend line, but by the time it gave the up close, there was no room left over here. There was no divergence. Okay, it went sideways, and then we had the crude inventories came out right over here, and it went a little bit nuts. See, from right here at 10:30 all the way over here at 10:31, all those bars are 1 minute. Excuse me. Now it gave some more opportunities in here, but we didn't take any of them. Okay. You can see it came over here, hit the BBC, gave a down close. It was bearish divergence, and it moved down. Over here, it gave a bullish cross, hit the BBC with an up close, but there wasn't any divergence, so no trade in there. Over here, it closed up above the trend line. I didn't take the trade, but if you did take that trade, you would have stopped out with an 8-tick stop. That's another thing. I use an 8-tick stop on every single trade. Okay, every single trade I use an 8-tick stop. And Keith R., I can send you all the information you need about that, okay? I'll send it to you in a little while in response to your question. Here, there were more opportunities in here, but the end of the morning session happened, okay? So we didn't take any more trades. Right in here where it's pulling back and testing the BBC right now, you would have to draw a trend line because there's blue on the cycle. Okay, there's blue on the cycle. We've hit the BBC, but the black line's about to cross up above the BBC. So you would need a down close below the BBC before the black line gets up above it. I don't think that's going to happen. And the blue cycle is headed straight up, so I wouldn't be taking that trade anyway. That was crude oil this morning. Okay, it wasn't a lot. Wasn't a lot of trades there on crude. The Russell, I don't think we traded the Russell this morning, did we? No, we didn't. There were a couple of opportunities on the Russell, but I didn't take them. I missed them for whatever reason. Now, the first one was over here. And hang on, let's shut that off. All right, the first one was over here, and we had a bearish cross to test the BBC with a down close, but it was going right into the weekly trading zone. All right, so I don't trade going into the weekly trading zone unless I have 2 points profit potential. And this is the Russell, so it would have to be 10 ticks. Okay, 2 points ES equivalent profit potential. We didn't have it. We only had 8, so I didn't take the trade. It ended up going down into the zone anyway. It bounced off the zone and it gave a long opportunity right here. If we go to the other picture now, this one. Okay. Same indicator set, same everything, but this time it's a trade off the BBC. Okay, instead of going with the trend line trades, this time it's off the BBC. What you look for is the bullish cross right here of the MA1, which is a blue and red line, over the BBC, which is the green line. And then space in here. See, step 1 is the cross. Step 2, price pulls away. There's some space in there. Step 3 is it pulls back down and tests it. Oops. Step 3 is it pulls back down and it tests it. And gives you an up close. All right. When you get that up close, you look down here for step 4, divergence. All right. Divergence is down here. Divergence is only in the slingshot. The green line is diverging from the cycle portion of the slingshot. To trade off the BBC, the cycle has to be the right color. Okay. So you look for a blue cycle to go long. And right there was the entry. All right. Gave another opportunity right in here. Same thing. The cycle was still blue. All right. After that, there was up here. This was a trend line entry, a close above the trend line. Okay, there was still just a little bit of divergence, not much. Wasn't really enough divergence there to really take the trade. And there was another one right here. This one went 4 ticks. This one went however many ticks that is, 5 or 6 ticks. Then it turned around and it started to go down over here. Okay, you were looking for the down close below the trend line, which would have been right there. All right, I remember going over this in the live trading room. Now, when you got your close down here below the MA1, that's when you bring your stop to break even. BBC stands for bull bear cross. Okay, you bring your stop down to break even, and at least that's when I do it. I bring my stop to break even, and there was an opportunity to take 6 or 8 ticks out of this trade, probably 6 ticks out of this trade, I think, right? 92.8 down to 29.2. I'm sorry, 29.8. 29.2, so 6 ticks. I would have had my stop at break even and gotten a break even on the trade. But as it turned out, the thing kept going down. There was another shorting opportunity right in here. Again, when it closed down below the MA1, right in there, I would have had my stop at break even. Then it was going into the zone, so I wouldn't have traded anything in there. Over here, we were looking for an up close above the trend line. That would have been right there for that move up. We didn't have a close there. And that pretty much wrapped up the morning, I think, right? Right in here. Just the up close. You could have traded this up close right here, too. I didn't notice this morning. But it came down. It hit the BBC and gave an up close. The cycle was still blue. You had bullish divergence, and the black line was still above the green. So you could have traded this long right here. Okay? Yes, Todd, after 4 ticks or when we get a close on the other side of the MA1, whichever happens first. That's when I move my stop to break even. Okay, now I'm really aggressive when I'm moving my stops around. You don't have to be as aggressive as me, but I am really aggressive. Okay, that's aggressive risk management. All right, that was it on that one. We didn't take any trades over there anyway. But over here on gold, we did take a couple of trades, 3 of them. Okay, so let's blow it up a little bit here. We took 2 wins and a break even on the gold. Okay. Now, gold moved around a lot today. There was a ton of opportunity on gold. A ton of opportunity. All right. I mean, I can go back here to the beginning. If I go back here to the beginning, And right in here was the first one, right here at the open. We had a bullish cross, tested the BBC with an up close, and it moved up. Then we had a bearish cross, tested the BBC with a down close, and look at that move down right there. There's another one right here. I know some of the partners in the live trading room got these trades. I didn't get these trades. I don't know what I was doing, if I was showing other things, showing people things, or doing the mentoring. But I didn't get those trades, unfortunately. I know some guys did. I mean, I know Frank was over $900 a contract this morning, and I was, $245. I often say, you should be doing better than I am. Okay, I often say that. Now over here, it was the same thing. It's the same stuff, guys, over and over and over again. We're doing the same thing. You bullish cross. Your attempted pullback to the BBC, it didn't happen, so you draw a trend line in there. Draw a trend line, look for the close above the trend line with a bullish divergence. We got that. The up close with the bullish divergence. I got long in there. I took profit up here. These trades happened really fast this morning. Another one right here, the same thing. Same exact setup right in there. There was a shorting opportunity right here on the down close. That dropped down, I don't know how many ticks that was. 70.8, and it dropped down to 70, so there was 8 ticks profit potential in that. Over here I had drawn this trend line in. Now the up close right here was no good because we had red on the cycle, so you needed to close above the trend line. That close above the trend line didn't happen until way over here. When it happened, there was no room left in here, really, for it to run. So you would have really just been going on the momentum of the market. Okay. Then everything got sorted backwards in here. You see how we have bearish divergence, and we're trading above the BBC. So we have to wait. Over here, there wasn't any room to run again, but this was a close down below the trend line. Right here, that's why I had it highlighted, because it was a close below the trend line. Down close below the trend line, but there was no room for it to run. All right, it turned around, went back up through the BBC, turned back around through the BBC again. In here, there was a little bit of an opportunity. And there was some room to run here, just a little bit, not much. And it did just a little bit, pulled back up. Would have been a break-even trade for me. This one over here, we did have more room, okay, on the down close right here, and I put my stop at break even, and I got taken out at break even. Now I entered it, and I got taken out at break even on that one. I missed all the rest of these trades in here. This big move up right here, this big move up right here, and this happened really quickly, but there was some nice moves in there, and I know some of the partners got that. And if you look at this, I think I highlighted this when it was happening. 75.4, from 75.4 to up here is 81.8. Let's just call it 81.4. That's the equivalent of $600 a contract right there. And that took all of 10:35 to 10:43, 8 minutes. Not a bad return on your time. Frank, even a blind trader could have made money in gold. Maybe. In here I was highlighting the areas when you would have moved your trend line. Okay? And then finally we had an up close above the trend line right here for the move up. This was all during the live trading room this morning. There was another one right there for the move up. We were looking for another opportunity in here because we still had bullish divergence, but we didn't get a close above the trend line. All right, over here we had a close below the trend line, but we didn't have any room to run between the green line and the cycle, so we didn't have anything over there. Over here we did have room to run on the down close, but it didn't go, so that would have stopped you out right there. All right, would have made it back on this one or this one. Turned around, and right over here we were looking for a down close below the trend line. There was no room to run. And over here we were looking for a down close below the trend line. I know one of the partners had asked me about that. I had totally missed it. I wasn't watching gold all that closely at this point because it was really jumpy. But one of the partners had caught that and asked me about it. Or one of the guys in the trial. I think Andrew, wasn't it you, in the trial? Anyway, that was it. And that was the end of the morning session. There was actually just a shorting opportunity right in here, I think. See, here's the trend line. Here's the down close. There's a little bit of bearish divergence right here. The room to run is right here, between here and here. So it doesn't look like it'll probably make it through this level right here, 75.8. If you got into that short, 75.9 might be a good spot to look for a target. All right. That was gold. Okay. In my experience, do correct color cycle trades have a better chance than trendline trades? I think they're pretty close to even. I don't know. I haven't kept metrics on all that. Just wanted to point out here, guys. The down close was right there, right? And I said, look for this right down here. So it's already done it on the gold. All right. The down close right there is 76.3. Down close below that trend line. And it's already done what we anticipated it doing. For those of you guys looking for 2 points, 76.3 just dropped down to 75.4. That's 9 ticks, just about 2 points right there. You're in that trade right now, Todd? Good. Okay. And let's see. Draw a trend line, a little bit subjective. Do I have a strategy just looking at the indicators? There's nothing subjective about drawing the trend lines. It's not at all. Not at all. The trend lines are based upon price action. You draw the trend lines until price hits the BBC. Once it hits the BBC, the trend line is in place. Then you just need to see the price action. Okay. But if you wanted to just trade off the BBC where you don't use the trend lines, you can do that too. You don't need to have the trend lines to trade off the BBC. Okay, you can do that too. So yes is the answer to your question. Okay, and Todd, you just stopped out at plus 5 ticks on this. Good. All right. You can draw another trend line here right now. You can draw the trend line, but the green line's into the cycle already, so I wouldn't anticipate much more out of it at this point. All right. I would look for it to pull back soon. Pull back up to the BBC, and it would give you more. Bob, I'll give you. I'll send you information too. Okay. I'll send you the information. All right. All right. Gold's still going down. It just dropped right through the cycle. You see, now we say 2 points a day, and this is 76.3, and it's dropped all the way down to 74.7. That's $160 a contract. Is that right? Yeah, $160 a contract. So that's 3 points plus right there. All right, that's it on the gold. Now let's move over here to the NQ. Okay, there were a bunch of trades on the NQ this morning. I'm not going to show the pictures anymore because it's all the same. Market to market to market, market to market. It doesn't matter what symbol you're looking at. It's always the same. Okay. Let me back this out a little bit. You can see we had areas that we highlighted here on the NQ. Right at the beginning, there was this big move down. I know some of the guys made their 2 points on this move instead of making it on the crude oil like I did. They made it over here, and there was that big move. There was another chance right here for a little bit more. But the green line again was going into the cycle, so there's not a lot of opportunity there. The up close over here gave an up close. The up close right here gave a close above the MA1, at which point I would have moved my stop to break even if I were trading the NQ. But I didn't have an NQ DOM open today, so I didn't trade it. I would have had to break even on that. It got very choppy in here, and I don't mean to just gloss over the chop like that. But when it's choppy like this, there usually aren't many opportunities in there, no win or loss. But if you want to just really quickly, I'll go through this period of chop here, and then I'm just going to be done with the NQ. Okay, I didn't take trades on any other markets this morning, I don't think. Well, soybeans, I got to show you soybeans. Okay, right here was the trend line, and you were looking for a down close below the trend line, but the black line got up above the green, so there was no opportunity. Over here, by the time you got a close below the trend line, the black was above the green, so again, no opportunity. Over here, same thing. Okay, the trend line would have been like this, and by the time you got a close below the trend line right here, the black was above the green, so there was no trading. So it pretty much keeps you out of the opportunities that, out of the chop, basically. Okay, that's your opportunity right there. You would have just needed a down close off the BBC, so you could have shorted right there. The down close below the trend line, below the MA1, is when I would have moved my stop to break even. and would have been out of break even on that trade. Okay. And that's pretty much what I need to show you. It's the same stuff over and over and over again, regardless of the market. Okay. That is the NQ. Let's look at the soybeans, because we did place trades on the soybeans this morning. I took 2 trades on the soybeans, and I got out of both of them too early. I moved my stop up to break even. These were the trades that were available. This was pre-market soybeans right here, and then we had a bullish cross, and in here we had the momentum. Break above the trend line, looking for the green line to get up into the cycle. Right there was the entry. It moved up significantly. Okay. The next opportunity here was a pullback, another break above the trend line. I got long right in there. I moved my stop to break even after we had 4 ticks profit in the trade. It came back and took me out at plus nothing. Took me out at break even, and then it moved up like 20 or 30 ticks. I know we had at least one guy in there who took 20 ticks on this trade. The next one was over here that I took. There was one right here, a shorting opportunity on the down close right here on this Gravestone Doji. That dropped down. The next one was right in here. Sorry, Mike. I just saw your note over there. The next one was over here on the down close. I did take that, and I moved my stop up to lock in just a little tiny bit of profit, and I ended up getting out of that with plus 2 ticks. Okay, and that, obviously I got out too early because it did go down. The next one was over here, and it went up. And that was it on the soybeans. Gold is still going down now, guys. I just want to bring it over and show it to you again. Okay? Because the way that it works in the live trading room, when you're getting into trades like this, and the market is trending, we had to wait for divergence to come back. Okay, because we had run out of divergence. I told you when it got down here, look for another pullback. More divergence. There's the trend line. There's the down close. And there's another 2 points worth, probably. All right, right there at 74.9, dropped down to 73.6. So another better than 2 points, $130. 2.5 points. Okay, that's what we do in the live trading room every day. Day after day. All right, let me just jump over here really quick on the ES. There were a couple of opportunities on the ES. There was this one right here that wouldn't have worked out if you got into it. Okay, it would have stopped you out. Change directions. There was one right here on the short side that did work out. All the same stuff. Okay. This is the euro. There were a couple of spots on the euro this morning, and oops, let me scroll back here. Well, anyway, you guys get the picture. There's a trade right here on the euro right now at 29.90 if you wanted to get it. The regular trading hours for the euro ended about a half an hour ago, though. All right, I'm sorry, not a half an hour ago, about an hour and a half ago. All right. That said, let me just look at the questions here again. Andrew, you just made 13 ticks trading what you saw in here. Great. And John, if you can trade only one market, is there a way to make an educated guess as to which would be best for the day? For the day? I don't know about for the day. It depends when you have time to trade, how much margin you're able to accept, how often you want to trade. There's a bunch of things that go into it. But if you're just looking for trades, markets that have a lot of trades, then the Russell be a good one. Gold, crude oil. If you're looking for markets that don't have as many trades, but usually have good trending trades when you get into them, that have a small window of opportunity, there's soybeans, and natural gas. Oops, natural gas is back here. There was a trade right here on natural gas, and there was another one earlier this morning right in here on natural gas. All right, not a lot of trades, but they were good ones when they were there. It depends. It's up to you. But we can talk about that kind of stuff if you become a partner. All right, so that's it. I'm going to wrap up the recording right here, the recap. Again, if you have not taken a free trial with us, go to www.cfrn.net/free trial. Sign up for the free trial. If you have taken the free trial with us, and you want to know what it takes to become a partner, send us an email at support@cfrn.net. Support@cfrn.net. Just put partner info in the header, and we'll give you all the information you need to become a partner. Okay. When you become a partner, you get 3 months of the mentoring package. That's 3 months in the live trading room, 3 months of weekly trading zones, 3 months of access to the members area, where we have over 200 hours of videos, 3 months of weekly partners meetings, which we have tomorrow night, 3 months of swing trades, and you get the indicators for life as long as you have DT Pro. Okay? That's it. That's where I'm going to wrap it up. All right.
All right, guys.